Good morning, dear traders. Thursday's Asian session saw a varying lull. After yesterday's speech by the Fed chairman, Wall Street stock indexes rallied and ended the session higher. Japanese and Australian stocks perked up the optimism. Meanwhile, the news from China was not so positive. In general, asset movements have been muted today against the backdrop of a series of speeches by representatives of the world's central banks. Investors are looking for signs that the growth of interest rates has already perked. In this regard, great hopes were pinned on the Federal Reserve Statistics Conference yesterday and the opening speech of its head. On Wednesday, Jerome Powell did not comment on the economic situation as well as the actions and plans of the regulator. And today, the Fed's chief will be back in the spotlight. He will take part in a panel discussion on the monetary policy challenges in a global economy. And there is no doubt that his every word will be closely watched, and markets will immediately react to his speech. As investors await news from the head of the Reserve Bank, the US dollar is trading flat between 105.40 and 105.60. After yesterday's drop to 105.5, the greenback remains in a bearish territory. The US dollar index is consolidating in anticipation of Jerome Powell's comments. Today, falling US Treasury yields dragged the US dollar down. For example, the yield on the 10-year Treasuries fell to 4.5% early Thursday, the lowest level since September 27. In addition, after rather aggressive statements by European policymakers, the greenback risks losing value against the euro, and this is especially the case against the background of conflicting options and opinion of monetary policymakers of the US regulator. Bowman, one of the Fed's board governors, said that the regulator was considering aggressive action. Minneapolis Fed President Neel Kashkari said it was too early to declare victory over inflation. At the same time, Philadelphia's Patrick Harker believes that a pause at the November meeting was the right choice. The policymaker cautioned market participants to not get ahead of themselves. The Bank of Japan's governor also made a statement today. Kazuo Ueda reiterated that the Japanese regulator intended to maintain the negative interest rate until inflation reached the 2% level on a sustainable basis. The timing of the exit from an ultra-loose policy will depend on the economic and price developments. For the currency market, there was nothing new in these statements. As a result, the yen showed little reaction to the Bank of Japan's plans. The dollar-yen pair reacts much more strongly to the decline in the yield on the US government bonds. When US Treasuries fall, the gap between the US and the Japanese government bonds also shrinks, and the yen gets an opportunity to strengthen. The Japanese currency took advantage of this opportunity today, falling sharply in the Asian trading within the daily range of 150.7 and 151.10. However, the technical indicators are showing a bullish potential, and the pair has already climbed as high as 150 yen 90 sen by the end of the Asian session. The next resistance and support levels are 151.70 and 149.80 respectively. In general, US Treasury yields are preventing the yen from getting stronger against the US dollar. The fact is that the large yield gap continues to attract Japanese investors to US Treasuries. According to today's reports, Japan-based funds bought back nearly $22 billion on treasuries in September. Meanwhile, China, the most important economy in Asia, continues to slide into deflation. Today's data showed that consumer prices fell below zero to minus 0.2% in October. Meanwhile, demand remained under pressure and manufacturing deflation continued. This means that the people in China are getting poorer and are cutting back on their spending. The country's central bank governor recently stated that China's annual GDP was expected to reach its 5% growth target. However, negative inflation suggested that Beijing's stimulus measures have done little to boost overall spending. The weak performance of the Chinese economy has put pressure on the currencies of neighboring countries. For Australia and New Zealand, the Chinese market is the main importer and the antibody currencies are liquid proxies for the yuan. In addition, the decline in demand for commodities and oil in the world's second-largest economy pushed their prices down. As a result, the Australian dollar had no choice but to trade lower in the range of 0.6398 and 0.6420. As a result, the Aussie ended the Asian session on a sharp decline in the area of 0.6402. This week, the Reserve Bank of Australia decided to raise the key interest rate by a quarter point. However, the regulator's statement on further monetary policy was very soft and put pressure on the exchange rate of the national currency. The New Zealand dollar began Thursday's trading session with moderate growth, and the Kiwi consolidated within the range of 0.5907 and 0.5938 and ended the Asian session on the upside near 0.592. The New Zealand currency led today's growth among other Asian currencies. However, its movement still shows a bearish sentiment. The first resistance level is near the current low of 0.5917. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you soon.